guys, so let's talk my secret weapon to winning in the stock market, outperforming a financial advisor, outperforming all the talking heads on Wall Street, and how we do it. It's actually pretty simple once you understand the concept and trust it. And it's cycles. That's what I use to help me look into the future of the stock market, where most people would say you can't predict the future, you don't know where we're going, and maybe you can't predict it to the day. But as I'm going to show you, you can predict it to the time frame. All right, using good cycles. Now there's so many out there. Which ones do you use? I guess that's the secret sauce, is finding the right ones, right? I mean, you could do lunar cycles. There's a whole bunch of wacky ones out there. But if you can find the right ones, this can really give you the upper edge, both in your investing, if you're a day trader in your trading, and it's helped me both long-term investing and short-term investing as well. It's helped me invest through downturns. It's helped me invest through bull markets, bull and bear markets. Made money in both. So let me walk you through. I'm going to share my screen. This is going to be a case study on cycles and how I use them. And I've got long-term cycles. I've got short-term cycles here. Now, a couple of rules when it comes to cycles. Number one is they don't give us the exact day. They give us a time frame, usually within a couple of weeks. Sometimes it's a couple of months, but usually it's within that time frame. So that's number one. Number two is they don't give us the magnitude that the market's going to drop, like go up or go down. Okay, so if the cycle's up here, it doesn't guarantee the market's going to go up 50 points, or if the cycle's down here, the market's going to drop 50 points. It just says high point. There's a possible turnaround that's going to be coming. And then at the bottom of a cycle, it says, hey, this is your low point. This is a possible upswing in the cycle where if you want to get in and you're bullish, this is where you would get in and take it up. Okay, so number one is they aren't exact to the day, they're exact to the time frame. Number two, they don't give us the magnitude of a drop or of a bull swing up, right? They give us just, this is an area where you might want to hold or sell. This is an area where you want to buy or add to your position and take it up. Okay. We use other things on the chart to kind of help us figure out the magnitude that the stock's going to fall, and some other things. Okay. And the next, number three, is cycles are accurate probably about 80% of the time. Okay, now there's no tool in the market that's like 100% accurate, 100% guaranteed. There's not one tool out there that can give you that. And when it comes to the stock market, if you can get like an 80% accuracy, that's really good when it comes to the stock market investing, right? So I kind of go into the casino and saying 80% of the time you're going to be right and you're going to win. I mean, would you play? I think we all would. Right? And that's what cycles are, about 80% of the time or so. So they're not right every single time. And part of this case study is going to show us where it was wrong, and what the market did, and where it was right. And so what I'm going to do is I'm going to go back to 2006. I'm going to run this for about 18 years. We're going to go 18 years worth of data here to see ups, downs, all arounds, where the cycles projected us going, where we actually went. Okay. And then that's number four, is cycles project into the future, which is why there's such a cool tool to help us guide, to buy now or to wait or to sell, or, all of that, because it's kind of showing us where the market predictably should be in the future. And that's the key point that most people don't have, is they don't have data about the future. They're guessing about the future. They're hoping and praying about the future, where cycles can give us some pretty good indications of what's going to happen and where things are going. So with that being said, those are the 4 rules around cycles. Let's share my screen right here. Okay. And I'm just going to zoom in a bit and make it a little bit bigger. Okay, so I'm using TradingView for this, and I will have to. So I've got 2 things. This is my cycle kind of amplitude, where I can really flatten it or make it big. So you're gonna see me adjust that a few times, and these are my stocks amplitude as well. You're gonna see me adjust that as we go into the future, like closer to 2010, 2015, 2020, and so far and beyond. You will see me have to adjust, just because the market goes out of my screen. right? So I have to adjust and bring it down and all that. So we'll start to do that along the way as well, okay? But what we'll do is we'll look for sectors or time periods, I should say, not sectors, but time periods in the market. So let's start with going back to 2006, and we'll take it up to 2010. So we'll do 4 years right here on the chart, okay? Cycle is in, this is kind of an orangey, yellowy, this is a yellow. Okay, this is a long-term cycle I have. This is like for helping me guide through years, not days. Okay, and we'll use that. And when the cycle kind of goes soft, like it does right here, I'm going to bring in a shorter-term cycle to help guide us through the chop of the highs and the lows. Okay, now there's longer-term cycles in this we can throw up here. This one's been pretty accurate and really, really close, so I like this one a lot. So we'll use this one here for a couple secs, and then we'll bring in a few other ones here to kind of help guide us through some of the harder times in the market where the cycle wasn't maybe as accurate. Okay, so top, whenever we see a cycle top like right there, what it usually indicates, and it doesn't always indicate that we're at the top of the market, but it says, hey, we're getting near a top zone. We expect a turnaround to happen. Now, how big will that turnaround be? We don't know. Remember, cycles don't give us magnitudes of the ups and downs of the market. It just says high point, low point, high point, low point. Okay. Low points is where we want to get in, right? Add money to the market, take it up. High points is usually where we want to maybe push pause or sell, or sell some positions to buy at a lower point, or take profits. Okay, that's what we want to do there. Okay, so let's go through and do this. I got a couple sheets in front of me here. I'm gonna take notes of how many times we were accurate and right, how many times we were wrong. So here's number one, 2006 December. Now we had the cycle top kind of in at the end of October. About 4.5-5 weeks later, we actually hit our top. So boom, right there. That is an indication of the cycle saying, hey, you're getting near a top. It's maybe time to put a stop loss, or take some profit, or a trailing stop loss, because we should have a pullback coming shortly. And so 2006 was the top was. There was a top there, and we were right with that top. Okay. So I'm going to keep track of how many times we were right and how many times we were wrong. Okay, then it comes down and says, hey, about 2007 February time frame, we should be going into a cycle low. There was our top there. The stock market did come down. Now bounce up and down, right? Like it's still going to go up and down. It doesn't mean it's going to drop 100% the whole time. It could go up and down. It could go sideways. That's the thing with cycles. When you see a low point coming, like right here, it could just mean the market's going to go sideways. And that's happened many times. And that's kind of what happened here until near the end. The upswing in the cycle says we're coming near a top. And look at that. There's our bottom. Now, it said the top was going to be sometime in May-ish, sometime in the May time frame. The top actually happened in July. So it was about 8 weeks out. I would say that's pretty accurate. Okay, it's a little bit longer than I like it to be, but it did signal a top coming. Remember, cycles don't give us the exact date. They give us a time frame within usually a couple weeks to a couple months, and that's what it did there. It said our top's coming. Top actually came in July. All right, so what you would have done is had a stop loss or a trailing stop loss put there, because the stock market did continue to go up. However, it did say we're coming down, and that's exactly what we did. We came down here, and there's our low right there. So correct on the high, correct on the low, pretty correct on the high, correct on the low. That's 4 times the cycle gave us projections of where we're going to go. And that's 4 times it was accurate in its prediction. Okay. Now let's move forward here. If anyone here remembers 2008, 2009, remember all that stuff that happened? The cycles kind of showed us that was going to happen. Check this out. Check this out. Okay, I'm just going to move this down here so you can kind of see, you can see it fit into the cycles. There's our top. There's our 2007 top. Now the cycle showed us, remember, the cycle was, this yellow line was showing this well before the stock market ever did this, right? But because I'm looking in the past, you can see it line up nicely. But if you look into the future, like if you were in 2006, you would have saw the cycle projection just like this although 2008 had not, the top hadn't happened yet, right? So that's the cool thing about cycles is you can kind of see into the future. And if they're accurate 80% of the time, you kind of know what to do, right? And so there's our cycle top, there's our market top, boom. And then we come all the way down, and the cycle projection says, hey, it's bottom of 2000, it's February of 2008. So sorry, that's 2007, which was our top. We might be in a buying time here. This might be a time to add to our positions, to buy back in. Market had dropped. I'm not sure how much the market dropped here. Let's take a look. By that point, the market had dropped 46%. Ouch. That's a big drop. A lot of people were scared and taken out. But the cycle was right for the top. It gave us a bottom saying, hey, this is a bottom. Might be time to get in. And check this out. Cycle top, and the market came up. Now remember, the cycle doesn't give us the magnitude of how much the market's going to move up. It's just going to say the market should be moving up here. There's our top zone. There's our top. There's our bottom zone. And we hit that right there. Okay. So this is 2008. So within 2 years, we got the bottom. We got one bottom, two bottoms, three bottoms, four bottoms. And we got one top, two top, three top. We got four tops, all pretty accurate. Not bad. And then, let's see here. So we got four bottoms, four tops, and we got 1, 2, 3, 4, 5, 6, 7, 8. 8 of the times, I'm just going to put the dates here so I know when I'm tracking 2006 to 2000. And where was that bottom there? 2008. Tops and bottoms. Okay. Now we do get a little wonky here. You're like, well, Mike, the cycles aren't right here. They look the others call the top, and we actually just went down. And you're right. This is where the cycles were off a little bit. So let me do this. I'm gonna pull you up here. Okay, and we're gonna take a look here. Okay. Now it did get the down. I'll say this. It did get the bottom, although it didn't give us a great top zone there. So that's where it would have been a little out of sync, wrong. Okay, so I'm just going to put this in here. Wrong once, bottom, and then I'll put top so I can track those ones. So it was wrong on there, but that it did signal a bottom here, and we did have a nice little bottom. Okay, so the bottom was still pretty accurate, saying, hey, you're going to still, you still got a bottom coming. Bottom was right there, boom, there. It did project us going up, and that's what we started to do. We started to go up, right? So it did actually we didn't get the top exactly. Top was projected around April 2009, and it looks like we had about early June 2009. So again, off by about six to 8 weeks there. But that gives us a pretty good pass. That's a pretty good projection there of where we're going. Okay, so we had the bottom was right. The top was wrong. I put an X there. Our top here was pretty accurate, and then our bottom was spot on there. Okay, so two tops. Let's see here. We got 2 tops, and we got 2 bottoms. Both bottoms are right. And one of the tops was right, but one of them was wrong. Okay. Let's put right here. So 2 bottoms are right, one of the tops was right. Okay. We're going to go into 2010 here. Again, cycle bottom, showing us a top there. Now, again, this comes back to the magnitude. I'm just going to zoom this up just a little bit here. There we go. I'm going to pull this down just so we can see this here. It did show us a top, and we did have a top. And we did have a small pullback there, right? But it kept going. And this is an example of like this. I don't know if you can see the back behind this, but this blue line is what we call the Donchian channel. It's one of the technical things I use to help guide me in and guide me out. And so even though cycle says we're hitting a top, and we did, we had a really small pullback. We didn't have a big pullback at all. We actually had a bigger top before we had a bigger pullback, right? And the Donchian channel would have shown me right here. See how it turns white? That's my signal for getting out and verifying the pullback, right? So it verified the top, right here. We got the top, got a bit of a fake out to the bottom. We actually hit a real top there, and then we had a nice pullback there, which would have been February 12th of 2010, and the pullback was predicted to happen, about 7 weeks or 6 to 7 weeks earlier. Okay, and so it was pretty close, pretty accurate, not 100% on the money, but pretty close there. Okay, and so that's another top that was right, and another bottom that was pretty close. Pretty close. Okay, and then here we signal another top, and let me just do this to. I'm gonna pull you up, pull you down. Signal another top right there, another top zone, and then the bottom zone. Hit it exactly. Hit it like spot on. There's our top. There's our bottom. And keep in mind, this yellow line is here before the stock market actually happens, right? So it's pretty freaky how close and accurate it can be. Like pretty darn close. Okay, then we're going to move a little bit forward here into 2011. Let me just put 2011 on my chart here. 2011, projected top was projected for about October, and it happened early, so mid-October, early October, mid-October. Happened early November. So that is accurate. It's off by a couple of weeks, but that's accurate. Then it comes and tells us there's a bottom happening. That didn't happen. Look at that. The market continued to go up. So I'm going to put an X there. This is what I call an inverse cycle. This is what happens when the cycle inverts. So what happens here? It inverts, which means it showed us a low, but what would actually happen would be a high. And when you get an inverse like this, we should expect at the low that you'd hit a high, and then it would inverse and come down, and that's exactly what it did. And then it gave us a high, and we had a low. That's just an inverse out of sync cycle. So that's something, once you know what that is, that's something you know to look for when the cycle doesn't hit a low and it continues to move up. And that's what we had there. Okay, so I'm just going to pull those off. Okay, put an X there. So we were right on the high, but we were wrong on the bottom. Okay. So far, 2006 to 2011, we've had 2 wrong cycle calls. That's it. Everything else has been accurate so far. Woo! I like that data. Okay, and then what we do here is, again, this is where I'm going to start pulling things down a little bit here, just to match. Pull you under there. Okay. Cycle high, cycle low. Okay, we're in 2011, and look, pretty close. The cycle high was projected for about March 10th. Cycle high actually happened about 3 weeks before that, February 16th. So we're pretty accurate right there, although it did pull back nicely. But if you watch the cycles here, check this out. It didn't give us an indication that things were going to continue to go back up at the moment. It actually said we're going to have another low happening. That's exactly what we did right here. So even though it chopped a little bit and went up a little bit here, cycle just say, hey, there's a low coming. Again, warning sign. Don't be going all in right now. And we hit that low right there. All right, so that was another bottom that was right, another top that was right. Okay. And then let's just see where we're at here. Let me just move this. So there's our bottom going into a top zone. And although we did reverse and go pretty high there's a nice little top zone. We did go sideways a bit in the market, and there's another top zone. So we got a little choppy there, but we did see a high right there and a low right there, which happened actually quite soon. So what I'm going to do is I'm going to put an X there. That didn't give us the best prediction of a low, but it did give us a nice little prediction of the next upswing up. Okay, so it did give us some information there. So the top was right. The bottom happened, but the bottom was wrong. So that's 3 wrong from 2006 to 2012. So in 6 years, there were 3 calls that were kind of slightly off. Not bad in 6 years. It got 3 wrong. Hello, that's great. Okay. And now it did show us a top zone, and that happened right here. Pretty accurate to the zone when the top cycle bottom, and we had our bottom. So we got a bottom prediction, top prediction, both were right. Okay. Another top prediction here going into what year? We're in 2012 still. Another bottom prediction here, and look at that, the market hit another low. Okay, so another top and another bottom. That were correct. Okay, so let's do a little bit of resetting here because you can see the market started to go up huge. So let me just pull that down. In fact, let me just do this. I'm going to go over here like this and pull my cycles down just a bit so we can see what happened. Okay, so we got the low there. And as I move my chart, by the way, my circles will move. So that's just the way it's going to be for now. Okay, so we had a cycle high here. And I am going to zoom in just a bit. Okay, I'm going to move you up. I would say we didn't hit a cycle high. We actually continued to move up, and we did have some chop and downside. But that's where I'm going to put an X there because that's not 100% accurate. But then again, we've got signals to kind of verify the ups and downs, and so if the cycle top didn't happen, we'd have signals to verify that, so we would stay in. Cycle low, we had a low. There's our low right there. We did have a pullback, and the cycle did tell us there would be a pullback. So let me just get that in here. So we had a top that was kind of wrong. We had a bottom that was right. Okay. There's a low, and then saying another top zone. And what I'll do here is let me pull you guys up like that. Another top zone, and we did hit it there, and we kind of went sideways a little bit with a little pullback. So what I would do in this example here, where the cycles like they're still getting us in the zone, but they're not as accurate. So the cycle's kind of slowing down a bit here. What I would do is I'd actually pull up another cycle. I'm going to pull up this one here, which is I think it's a 36 day. And what I would do is I start to use this to help guide me in the more choppier times of buy-sell signals, right? So you can see here, top, little top, bottom, there's your spot to buy, right? There's another bottom, there's your spot to buy. There's a top, there's your kind of spot to get out. Now it's smaller moves, as you can see here, because there's a shorter time frame, so it's showing us in and out really fast. But basically what I do here is just say, and this would be like, this for me would be a verification to get in as a low, and that we are going to go up, and that's exactly what we did. Both the short-term and the long-term cycles were at a low. Usually that's a strong indication that we do have a nice up move. Okay, we hit a top there, and there's our top there. Okay, short-term cycles do show a bottom coming, and there's your bottom, right? So I'm just going to measure the long-term. I won't measure all the short terms in terms of what was right and accurate. Short term is really accurate. But I know we got a couple bottoms, a couple tops, and both were right. Okay. Coming into a top zone, you can see here it kind of extends on the long term. The short term did show us that we were going to bottom out and then come back up, and that's what we did. The long term said, hey, you're near a top. It's probably going to come down, and that's exactly what happened. Boom. And there's our top zone for the long term. Remember, the long term's in yellow. So top zone, bottom out. There's our bottom. So we're right at the top, right for the bottom, one for the top, one for the bottom. We're right on both. Pretty crazy. Like, isn't this pretty crazy? Now we're in, what year are we in here? 2014. Okay, so I'm gonna pull this down a bit here just so we can get more accurate. So it says, hey, we're in a bottom zone, pretty close to one. Take it up. There's our top, and look at that. Hit our top again. Boom. This is saying, hey, there might be a pullback coming. Just wait. And there was, and we did go up a little bit more, but boom, look at this. Big pullback right here. Big bottom on both the short term and the long term cycles. Wow. Just going to make note of that. Both were right. Long term cycle. Again, now that the long term cycle is seems to be intact again, what I'm going to do is I'm going to pull up the short term. Short term would be great for more like day trading, like if you're doing day or swing. Short term is really going to help guide you in and guide you out fast. Long term is going to keep you in longer and get more of the bigger moves. And that's what I want to show you guys here is just the more of the bigger moves. So we hit a bottom here, cyclical top here. And what year are we in by now? We're in 2014 at this point. Cyclical top there, and we're in a pretty choppy zone, but we have this nice little run up. Right, so again, it doesn't give us the exact date, it gives us a time frame of where we're going to hit a top, and that's what we did here. Now check this out. Just bring this down a bit here. Low. Cycle says low zone, but the market didn't, I mean, it dipped a little bit, but it didn't dip a ton. So this is one of the things that a top and this is one of the things that a low can do for us. Let me just mark this in my notes here. It's just because you have a cyclical low doesn't mean the market's going to drop. Sometimes it can mean the market's just going to go sideways and chop for the period of time that we're in the low zone. And that's exactly what we did here. We kind of chopped. We didn't go up or down. We kind of went sideways, right? But what happens here is we go into that, again, cyclical high. It does give us a point of saying, hey, we should be going up, and that's exactly what we did right there. Another low zone. We went low there. Right? So sometimes a low just means we're going to go sideways in the market. It doesn't always mean we're going to drop 20% in our stocks. But it's an indication, because if you're going to go sideways in the market, you might want to change your strategy, because you're not going to make any money going sideways, really. Unless, there's some strategies around where you can, but if you're just an average investor, you make money when it goes up, right? So if it's going to go sideways, the cycles are going to kind of give us guidance for that, okay? And then look at this. We come into another top zone. Cycles do come, or stock market does come up, another low zone. There's our low. Wow. Like, I don't know about you guys. Like, is this not kind of freaky how close it is? Again, not perfect. I'm just going to bring my cycles down a bit. I'll bring the stocks just a little shorter a bit. But it's not freaky. Low zone. Hey, cycle says, hey, we're going to be in a top zone around here. And that's exactly what we did. There's our top. There's our cycle top. Pretty close. Not perfect to the day, but right in the time frame. All right, and then down here is where I think it was a little off. Low, I mean, we did hit a low there, but we hit that well before the low zone. This might be an inverse cycle where I said, hey, oh my gosh, it's actually not going down the way we thought it would. It's continuing to go up. I expect it to start to go sideways or drop around this zone. And that's exactly what it did. It started to go sideways. Actually went sideways for a while there. Top, didn't really do much there, so we'll call that one. Top, and I wouldn't say it's wrong, but I'm going to put it in the not accurate file, because it wasn't 100% accurate for us. That's where a shorter cycle projection probably would have done well for us. So, for example, if we hit here, go back to let's see here if this would have helped us, guide us in. Inverse right there. Yeah, even this one was kind of, it was okay. It wasn't showing us big ups and downs. It's kind of really meager, which is, what year are we in here? 2016. Yeah, we had a sideways market that year. And the cycles are kind of not giving us great indicators, but they are showing us that, hey, there's not great big moves happening. Interesting. We do get back into the cycle, it looks like right here. I'm going to pull the orange out for now. Let me just pull you down. Okay. So we were wrong here. I wouldn't say we're wrong here, but because we did have a top, but we didn't really have a really nice top. It was kind of blah. So two more top, another top, another bottom, top, bottom. I'm gonna put two that were kind of missed. Another top zone here in the cycle, and the markets did move up again. Not a ton there. So that wasn't a great indicator. But here's where it looks like we get back into sync. So I'm gonna put an X there. Again, just to say, hey, wasn't the greatest indication. But there's our bottom, nice little up. There's our top projection, and boom, we hit that top. So we had another bottom, another top, another two there. Okay, and then let me just pull this down a bit here. And I'm going to have to amplify this a little bit like that. There we go. So we can start to see it here. Okay. Bottom. Pretty accurate. There's our bottom. That's not what I wanted to do. That's what I want to do. There's our bottom. Top zone. Look at that. We stay in the top zone for a while, and we do hit that top before we have a bit of a pullback. A bottom zone. We bottom out there before we have a nice little run up. There's our top, and there's our top. Pretty close. So two tops, two bottoms. All four were accurate. All right, let's do this here just to see the magnitude. Now we did come down. We did hit that top. We did come down, come back up before we came down. And the bottom really was showing us around this time zone would be the next kind of time to get in and take it up. So there's our bottom. That would have been February or April, and then May. Yeah, so about 4 weeks later, we actually hit that bottom. And that was our next indication saying get in. So we would have gotten around here and take it up because we have a nice upswing. There's our top, and there's our top. We did pull back a little bit. We did continue to go up a couple weeks later, and then the pullback really started to happen right over there. Just give me a sec here to bring it down just a bit. Okay, projected bottom was, November-ish. That's a long bottom there. We hit that bottom December, so about a month, about 3 to 4 weeks later, we hit that bottom, which is pretty, again, it gives us a time zone. Before it would go back up, there's our top, and our top actually happened there. So again, the top was projected in March, and it happened in April, or actually, yeah, April-ish, end of April, so 4 or 5 weeks, which is pretty accurate. All right, so that's another two. Okay, and what year are we in right now? 2019. Okay, so we're getting more current here. Another bottom. I feel like this is getting boring now. We're getting all the bottoms and almost all the tops. There's our top. It's like, okay, we get it, Mike. It's working. It works. Yeah, it's off a little bit here and there, but it works. And then this is what I want to show you here. This is where I think you get the point of where I'm going. Right here, let's talk about this. 2020. Everyone remember what happened 2020? February, March 2020. That was the COVID. Remember the COVID scare? Remember you couldn't find toilet paper? Remember like the world was ending? Everyone was going to die because of this virus? Blah, 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 blah. Here's what's crazy about these cycles, and this cycle in particular that I'm showing you here, is this cycle predicted the drop that would happen due to COVID well before COVID was even a thing on our minds or on our consciousness. In fact, it showed it happening years before it ever happened. And so what I find so crazy is these cycles, again, the magnitude is not always guaranteed. We're not always guaranteed that's going to be a 40% drop, But it does say, here's your high point. And here's your low point where you want to consider buying. Now we hit the low point, like, okay, the low was March 18th, cycle low was literally a month later. So we're in the zone. That's close enough for me to say that's accurate. It's within 4 weeks. So the cycle bottom hit and the stock market completely turned up. And then we had our high point. We were a little bit off here, low point. We did have a pullback into here. Okay. But there we go again. High point, low point. There's our low point. Within the time zone, within the time here. And this is where we are right now. There's another low, by the way. So what I should do is I should probably do this. And then bring it back so you can kind of see it. Cycle high, and I actually probably don't need these that big. Cycle high, yeah, we missed it by a week or two, but we were pretty close. Cycle low, cycle high. This is going to 2021, 2022. Remember what happened then? Remember when the stock market felt like the bottom fell out? Well, we saw that was going to happen before it ever happened. Cycle low. Okay, and this is where things got a little dicey. Cycle low, cycle high up here, and we didn't hit the high till over here. But the cycle did kind of show us here that some weird stuff was happening, and just be careful. You see the magnitude of the cycle started to change a bit here, and we started to see that happen here. So in a time like this, actually what I would have done is brought on my short-term cycle and have that help guide me in. Cycle low, market low, cycle high, there's your little market high right there. Cycle low, market low, cycle high, market high, cycle high, market high. This is very short term. So if you're long term, you probably would have just been out for all of this because the long term cycle said get out. But the short term cycle, if you're a day trader or swing, the short term cycle is what would have guided you in through a time like this. Okay? The long-term cycle does start to get back on track right here. Those are high. There's our low. We have a bit of a low there and another one right in that same time zone. Then it shoots up. It tells us there's a high. Boom. There's a low. This is our most recent low in April. And then let me just pull that out for a sec. And here we are. Cycle high, which just happened in July 2024. I recorded this in August of 2024, so we saw this happening well before it ever happened, and now it's coming down. Have we hit a low? Not yet. When will we hit that low? I think, see this little line right here, I've been measuring these cycles. I've been measuring the lows and the highs. And if I do this right here, I think our next big upswing and opportunity to get into the market is October of 2024 is our next big cycle upswing, and we'll see that market upswing with it. Could I be wrong? I could be wrong. Will I be wrong? Who knows? The cycles have been right more than 80% of the time that we've been tracking here. More than 80%. Actually, I have my numbers. From 2008 to 2020, the cycles were off 1, 2, 3, 4, 5, 6, 7, 8. They were off 8 times. Out of, we had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22 bottoms and 22 tops. So 44 calls, like 44 bottoms and tops combined, and the cycles were off 1, 2, 3, 4, 5, 6, 7, 8 times. So if I do the math, let me pull the calculator out here. I think if I do this right, 8 divided by 44, 18%. So the markets were right 78% of the time. No, 82% of the time. The cycle was right. What did I say at the beginning of this? These cycles are right about 80% of the time. So in my tracking here, I got 82% of the time the cycles were right. If you can get an indicator that's right 80% of the time, use it. It's how you're gonna outperform the stock market. 82% of the time, it's accurate. Obviously, you want to put some other things around it to confirm the drops and all that stuff, and that's how we get it to like 90% accuracy. But if anything, any tool you have can give you an 82% accuracy, go get it, because there's nothing out there that gives you that type of accuracy when it comes to technicals. So the cycles are right, at least in my example, since 2008, 82% of the time. To me, that's a huge market shaker, and that's the difference between you having a mediocre portfolio of 8%, 6%, and you having a portfolio that performs at 20, 30, 40, 50, 100% year over year. So hopefully you like that. I know this video went on quite longer than we wanted it to, or than I expected it to, but we went through like 18 years of data in about 40 minutes here. All right. If you have questions, reach out. If you are ready to get started with your investing journey, or maybe you've already got investments and you want to, get to the next level, this is how we're doing it. All right. Reach out and let me know. Happy to answer any questions. We'll talk to you soon. Bye for now.